Ashutosh Khajuria, CFO Federal Bank, now joins us on this conversation. Mr. Khajuria, thanks so much for joining in. What have you made of the RBI's decision to cut rates by 25 basis points? What are the implications as far as deposit rates and lending rates for banks are concerned?
See, more than policy rate cut, I would say the impact would be of the stance change. So once you move from neutrals to accommodative stance, that leads to expectations which suggests that there could be more cuts in offing. And I think it's in line with the global environment wherein you are seeing US 10-year Treasury going to 2.09 and all major economies either their sovereigns are closer to zero, or I'm talking of the major economies. In fact Swiss bonds are almost red till 20 years. Only 30 years is about near zero and all. So all these suggest that there is an expectation all around that the global slowing down is there, and it's going to persist for some time. So in such a scenario, we already had two installments of rate cuts from say 650 to 625 and 625 to 6 in last 6 months. So this is the third one in 6 months. So I think with change in stance, it further suggests that it could, the rate cuts may continue, and there would be a supply of liquidity as well, because if the stance is accommodative, you can't have the tightness on the liquidity side. We have seen more than 3 trillion rupees of liquidity had been injected in the previous financial year through OMO purchases, and these are continuing in this financial year as well. So I think overall, if we look at, the policy rate, it's probably the lowest in last 10 years. I think after September 2009 or so, 2010 or so.
Sure.
This is the lowest policy rate that we are seeing, in 2009.
Sure. Mr. Khajuria, when a rate cut happens, you see the CP/CD market getting repriced immediately, but that's not the case with bank rate transmission. As rightly mentioned, you are seeing, the key policy rates are at a low. How many more rate cuts need to happen for bank transmission to take place?
See, I think as Governor himself has mentioned in his, statement, that there had been a policy transmission of 21 basis points out of 50 basis points cut, and that has happened in a shorter time than the earlier, earlier periods or so. So I think in money markets, it immediately gets transmitted. You start having, call money rates, your CP, CDs, everything getting repriced. But please remember, in India, banks' balance sheets are little rigid. You have more than 80 to 85% of the balance sheet coming through public deposits, and these are, other than CASA, these are fixed deposits. As the name suggests, you don't have the flexibility of changing your cost through this fixed deposits or so. And looking at the chase for deposits amongst all the constituents, including the mutual fund industry or so, you have a small savings market as well. It's difficult for banks to cut the deposit rates so sharply or so suddenly. So it has to happen over the repricing of the fixed deposits. Silver lining is there that nearly 60 to 75% of term deposits have the original maturity of 12 months, and therefore the repricing happens normally in 2 quarters, and that had been the delay all through. That takes almost 3 to 6 months for the full transmission of monetary signals.
I have one final question, sir.
And it would continue because
sure.
The balance sheets have not changed overnight.
Sure. I have one final question, and this is on what the RBI said on growth. It has cut the growth forecast. It says growth impulses are have weakened significantly. What is your assessment on the ground? Are you, what is the data that you're finding on the ground as far as growth is concerned, particularly in credit flow to industry, credit flow to for the consumption sectors?
So it's further corroborated by the change in stance. So I think two things. One is, of course, the balanced risk on the inflation side. There is certainly, I mean, there are lots of signals right from auto sector to various other, leading indicators and the high frequency data that slowdown has creeped into Indian market as well. And proof of the pudding is eating. We saw Q4 numbers coming on 31st May as 5.8% for GDP. So I think all these together suggest that we have slowed down, and if this needs to be reignited, the efforts and measures have to be taken on both fronts, monetary as well as fiscal. So monetary, you have already seen 3 consecutive cuts. Now what we need to see is on the fiscal front through budget and various other measures that government has to take.